Hello. In this video, I'm going to hopefully answer a request by Mr. Crease. He is looking for recipes that focus specifically on the BTC currency, meaning all coins use BTC as the right side of the pair. I went searching through some of the recipes in the pinned area of the Jackrabbit settings area to see which ones might do well. And I noticed a very particular and unusual trend to BTC as a currency. So I decided to make 3 different recipes specifically tuned to BTC. And I'm going to cover each of these recipes and some of the things I learned about using BTC as a currency. So let's start with the first recipe and the first bit of information I discovered in this process. One thing I discovered is that BTC's volatility makes scalping extremely difficult. Recipes below 5 minutes don't seem to do very well in terms of finding opportunities easy to test and analyze. Recipes above 5 minutes will always give you more trendy opportunities, but higher volatility of BTC makes the risk to reward ratio quite difficult to manage in general. So this first recipe, I started out with momentum and volatility. And as you can see, it does 3 trades with a 13% average profit. And it takes a maximum so far of 20 positions. Let's start with the momentum. Let's get down to the good parts. Now I'm using a split channel to help offset as much as I can the volatility that exists within BTC itself. Because the biggest hurdle of using BTC as a currency is, even though ADA may be going up in price, if BTC goes down in price, ADA still goes down in price, even if it is climbing in value. So I chose a super smooth moving average for both momentum and 273 as my window. Now I didn't need to mess with the multipliers just because the volatility is already extremely difficult to work with. And I inverted it. So I wanted a momentum based upon trend. So this is pretty simple, almost cookie cutter, but still quite effective. For Bollinger Bands, for volatility, this is not as aggressive as I normally like. Split channel though, I'm also using the super smooth moving average, and I'm using a very short median compared to what I normally use. I'm also using a very small deviation. BTC has tremendous amount of volatility built into it. And I don't want to compound the volatility in an inverse way, meaning that BTC's volatility goes against the position I'm actually looking to purchase or sell. So I chose a smaller deviation for my Bollinger Bands. Okay, and now dollar cost averaging. This is also pretty straightforward cookie cutter. Now you can do strategy or take profit. $16.2 is 32% rough profit basis at 10 positions. So take profit does well for mitigating your exposure. $13/3 is 39 with double the exposure. So is 7% profit worth the exposure? That's something you have to decide in your risk assessment of this recipe. As you can see, everything is pretty straightforward, nothing over the top. So here we have the momentum and dollar cost averaging by themselves and the Bollinger Bands. For example, let's hide this. Here you have just the Bollinger Bands, split channel. Let's zoom that in. Okay, let's get rid of Bollinger Bands. And let's look at the momentum. Again, pretty straightforward. I could probably tune the peaks and valleys, but you're looking at an issue already of having a very limited number of purchases for what this particular recipe is looking at. And finally, the actual dollar cost averaging itself. As you can see, volatility plays a huge impact in how well BTC performs as a quote currency. It's a difficult process to work with. And you can see by the timeline how long you can stay in a position and how much exposure you might accumulate over time. I would consider this approach aggressive. It doesn't seem that way, but 20 positions does indeed make it quite aggressive compared to a few of the other combinations I'm going to demonstrate. Staying in a position is complicated at best. So we started on August. So August 29th. So this position is already pretty much 1.5 months old. That's a long time with a maximum position count of 20. So that might be something to consider with this recipe. Okay, let's take a look at the second recipe. The second recipe is quite different. It has 3 trade cycles, only 10 positions. This is strategy mode. Let's look at what it does for a take profit. Eight trade cycles, 3% profit, 5 positions maximum. So it does better if you want to use take profit as a driving force, in some respects compared to the first one. But really, this is 24% rough profit, 16, 32, 48% rough profit. So this wins hands down with the exposure. Now let's look at the reason. I'm using moving averages, convergence, divergence, MACD, and I'm using ADX. So convergence and divergence and trend. A pretty good combination. But again, you'll notice, like the first recipe, price action is well below the averages, simply because of volatility. And mostly volatility of BTC itself. Okay, now for MACD's settings. Not really a lot different than normal, except usually when I pick 11 for the fast line, I pick 23 for the slow line. But this time I'm only using 19. And normally the smoothing would be 11, but I'm using 7. So I'm using slightly modified numbers to tune the responsiveness with respect to convergence and divergence. ADX. This is an interesting one. I'm using 23 for the length. Normally ADX length is 25, but I wanted 23 specifically to look at an offset with the MACD, so that they're not literally matchy or causing a correlation that may not be profitable. So as you can see, the second recipe does quite well. Let's see how long this particular trade cycle lasts. So let's find out where it started. Okay, there's an opportunity to manually sell above profit. Another opportunity for a manual sell above profit. Here's a huge run of above profit. And here it first started. Okay, so this is the end of August again. So roughly about a month and a half for this one. For this one particular trade cycle that is still in progress. And now finally, the last and probably the most complicated recipe. This one is what I would consider the most defensive. I'm using a momentum, so 28% roughly, 4 maximum positions per trade cycle. Very defensive, very much less exposure. Okay, let's turn off the DCA module and look at the momentum. Standard split channel. Wrong module. I'm using a sine-weighted moving average though with this one, and it is more responsive to market polarity. Again, the multiplier is 1, so I'm not really trying to weed out the volatility because BTC is already volatile. And it's also an inverted. So this is pretty much standard except for the sine-weighted moving average. And of course the DCA module itself. That's pretty standard cookie cutter altogether. So let's go back to the profits. 4 positions maximum, 28%. Let's see what it looks like with the take profit. Six positions, 2%, only 12. But only 1 position per cycle. That might be worth it with this being only 1 position. Give and take here. Which one is best for the circumstance? Let's put this back to strategy and find out how long it's been in a run. Zoom out to maximum. And here's our first purchase. September 21st. So almost a month, and we have a clear case here of being in profit. So now let's look at the other indicators. And what do they bring to the table? Well, let's look at A-Rune. Highs and lows. And I have this set to 73. Slightly less than normal because I have a twist here. I am using the RMA algorithm to conduct smoothing. So let's see what it looks like with no smoothing. Okay, there it is with no smoothing. Here it is with EMA. And finally back to RMA. The same one used by RSI. Now I'm also using an unusual length. 31 for Arun is unusual. Some say it should be 14, others put it at 20. But 31 is definitely unusual, and my boundaries for purchasing and selling are at 73. So this is very much a standout compared to most indicators or equations. Tongue-tied there. And finally, parabolic stop and reverse. This is interesting in that when you look at it, it does a good job in finding unusual bottoms to large trends. So it can be quite interesting when coupled in this way. Notice each case. Here and here. The bottoms are always lower than the previous bottom, or the lowest low, as many like to say. So this adds to the entire recipe by weeding out any of the middle ground. And here you can see that the selling point is at a high point of the run. So let's look at it all together. So here's a sell point. The green line is the 2% profit. This shows you how far above profit this sell point was. Quite impressive. But exposure is quite daunting with these recipes. So here you have 3 recipes, ranging from aggressive to conservative or defensive. And all 3 of them do very well, depending upon what you're actually looking for. So let's get these centered. Get this turned back on. So 3 different approaches to BTC, but all of them do well. All of them are profitable, and all of them have their own risk assessment. So if you do trade BTC, the most important takeaway I have found is don't try to scalp. Scalping does not seem to work well with BTC as a quote currency. Each of these 3 recipes would be considered a swing recipe. They're not necessarily overly fast, but they're not overly slow. and they all work very well. So hopefully that answers the question in terms of how to trade BTC as a quote currency, and hopefully provides insight so that when you go to make your own recipes, you know what you are looking for. Many thanks to Mr. Kreese for asking this question, because it certainly gave me some enlightenment about the differences of BTC as a quote currency versus fiat or stablecoin, and just how much BTC volatility plays into the entire recipe. Until next time.